Wow. Singapore stocks hitting highs we haven't seen in what seems like forever. 17 years. Can you believe it?
It's pretty remarkable.
It is. And, we're not just here to skim the headlines. We wanted to, really get into it. So we're doing a deep dive today based on two recent articles from the Business Times and the Edge Singapore.
Yeah, and I think what's really interesting is this all ties back to the U.S. Fed's recent rate cut,
Right.
which maybe wasn't totally expected.
Totally. So just to recap for anyone who maybe missed it, the U.S. Fed cut interest rates by 0.5%.
It's a big deal.
It is. It's a big deal. And they're trying to kind of walk this line between stimulating jobs but not sending inflation through the roof.
Exactly. And what's fascinating is how this actually impacts us here in Singapore.
Right.
Because what happens in the U.S. doesn't stay in the U.S.
Right.
Right. So when the Fed makes a move like this, it gives our own monetary authority of Singapore, the MAS, more room to maneuver, more flexibility with their policies.
So hold on. Let's pause there for a sec. Because I know not everyone listening is glued to financial news every day.
Sure.
So the MAS, just to really simplify it, they're basically the big decision makers for finance in Singapore.
Yeah, exactly.
Yeah.
They control things like interest rates, exchange rates, all that stuff.
Yeah.
Which has a ripple effect on everything.
Got it.
From how much it costs you to get a loan to what you're earning on your investment.
Okay. So lower rates in the U.S. give the MAS the ability to potentially lower our rates here.
Yeah.
And then that brings us back to these soaring Singapore stocks.
Right, because lower rates here would be huge.
Yeah.
Especially for REITs, real estate investment trusts.
Yeah.
You see them all the time on the market. And cheaper borrowing basically makes those REITs even more profitable. So it's probably a big reason why they're leading this market surge.
Makes sense. And it's not just REITs. The articles mentioned that banks were also performing really well.
Right.
And they're often seen as a bellwether for the economy, right?
Yeah, they're a good indicator of the overall health of the economy. And, it's not just us saying this. Analysts at big firms like JP Morgan and Bank of America, they're turning bullish on Singapore.
Really?
Yeah, they're becoming more and more optimistic about the market's potential.
Okay, so that's a pretty strong endorsement there. But there's this other angle to all this too, right? This idea of Singapore being a safe haven.
Yeah, there's definitely that element too.
What's that all about?
Well, one of the articles quoted Nigel Pay from Timefolio Asset Management. And he basically said that whenever there's some global instability, think U.S. election investors tend to get a little bit spooked.
Makes sense.
And Singapore, with its stable political system and strong economic fundamentals, well, we start to look very, very attractive.
Yeah, you don't want to be holding the bag when everything else is going crazy.
Right, exactly. So
Well,
they look for somewhere safe and stable to put their money. And that's where Singapore comes in.
so it's kind of like everyone's looking around going, whoa, things are a little shaky. Let's put our money in Singapore where it's safe and sound.
Exactly. And all that money flowing in just further fuels our market. But of course, it's not all sunshine and roses. The articles did mention some potential downsides or challenges that come with this kind of growth.
Right, because even with good news, there are always going to be caveats in the financial world.
Always caveats. Right. So in terms of potential downsides, some analysts like Craig Bell over at Eastspring Investments, he pointed out that a global slowdown, especially in the U.S., that could definitely impact demand for things that Singapore produces.
Yeah, that makes sense. We're a global economy. It's not like we're in a bubble here.
Exactly. We're all interconnected. But some experts suggested that this impact might be balanced by other factors, like those lower interest rates we talked about,
Okay.
which could actually make Singapore even more attractive for businesses.
So it's kind of a mixed bag there. On the one hand, you've got potentially decreased demand. But then on the other hand, you've got this increased attractiveness from investment and for doing business. Did the articles mention anything else that investors should be aware of?
They did. Michael MacDad from Morningstar. He pointed out that while he does expect Singapore to lower interest rates following the Fed's lead, those cuts might not be as aggressive.
Oh, interesting. Why is that?
Well, remember how we were talking about the MAS having wiggle room?
Uh-huh.
They're not obligated to just copy whatever the Fed does.
Yeah.
They're going to be looking at factors that are specific to Singapore's economy before they make any big moves.
So it's not just a matter of, oh, the U.S. did this, so we have to do that too.
Not at all. It's much more nuanced than that.
Gotcha.
And another analyst, Xavier Lee, also from Morningstar, he was particularly bullish on REITs and developers in Singapore. He thinks this whole situation creates a really good environment for them.
So for someone who's listening to this and they're thinking, okay, this is all really fascinating, but what does it actually mean for me? What would be the key takeaway for them?
That's the million-dollar question, isn't it?
It is.
I think if you're invested in the Singapore market, especially in things like REITs, things are looking pretty good right now.
Okay.
But, and this is a big but, past performance is not necessarily an indicator of future returns.
Right. Don't go putting all your money into something just because you heard it on a podcast.
Please don't do that.
You got to do your research, consider your own risk tolerance, all that good stuff.
Exactly. And it's also important to remember that, yes, there's a lot of optimism right now, but the financial landscape is constantly changing. Staying informed and being ready to adapt is key.
That is good advice, no matter what.
It really is.
Yeah.
And I liked how Manish Pargava from Straits Investment Management put it. He said lower U.S. rates could lead to what he called capital inflows into Asian markets, including Singapore. Basically, more money flowing in from overseas investors who are looking for returns.
So it all ties back to that safe haven idea.
It does. You combine that stability with the potential for growth, and suddenly Singapore looks very, very good to foreign investors.
This is fascinating stuff. But you know me, I always like to play devil's advocate. So what are some things we should be watching out for?
That's what's so great about these deep dives. We've unpacked these articles, but now it's sparking even more questions.
Yeah, give me those what-if questions, because now I'm really curious.
Well, for one, what if this whole safe haven thing gets a little too real? We talked about how everyone's banking on Singapore's stability, but could that actually lead to problems? Like what happens if the property market gets overheated?
Oh, that's a good point. We've seen that happen before. It's not like it's impossible.
Right. And then that makes me wonder, how will the MAS react if they start seeing things getting out of hand? Would they do things differently this time compared to the past?
Those are the million-dollar questions.
They really are.
Yeah.
And honestly, there's no crystal ball here.
Right.
The MAS has a tough job. They have to juggle so many different factors, both here and globally. It's a lot of pressure.
I feel like this whole conversation has been like peeling back layers of an onion. You know, we started with these articles, and now we're seeing all these other layers underneath.
That's a good way to put it. It's not just about what's happening right now. It's about how those things might set off a whole chain of events down the line.
Yeah, and that's why I think it's so important to stay informed and engaged. Like, the more you understand how all these pieces fit together, the better prepared you'll be for whatever comes next.
100%. Whether you're a seasoned investor or just starting out, that's how you stay ahead of the game.
So for everyone listening, here's the takeaway. The Singapore market is definitely having a moment right now. Things are looking up. But as we've seen, it's not all smooth sailing. There are always challenges, and the story is far from over.
Don't just rush out and buy everything because the headlines sound good.
Exactly.
Think about how these global trends might impact your own financial goals. What are the risks? What are the potential rewards? And make sure you're doing your own research.
Couldn't have said it better myself, though. Keep those thinking caps on. Do your research. And stay informed. Who knows what exciting developments are just around the corner for the Singapore market? Maybe our next deep dive will be on your incredible investment success story.
I would love that.
Until then, happy investing, everyone.